Hello, this is Dean Malone with ComstFX. I hope you're doing well today and you're getting some good trades. Let's take a quick look at the dollar CAD. Now, before I jump into this, just as a reminder to those who are new to the Forex, we have the dollar, the US dollar on the left side of the pair and the Canadian dollar on the right side of the pair. So when the Canadian dollar strengthens or the US dollar weakens, we see a move down. And that's what we got today on worse than expected US data, with the retail sales being off and the producer price index number being off. But they weren't off by that much. And so some are thinking that this was just enough for dollar bulls who have been long the dollar CAD currency pair have squared their positions ahead of tomorrow's interest rate announcement by the Bank of Canada. So we get this big move down today right after the announcement, and it continues plunging down. I think what we had happen today was the fact that the worse than expected US numbers caused dollar bulls to square or close their positions, take the profit that they've had, and come out of those Canadian positions they've been holding, and then that triggered sell stops, which ran the market all the way down to about the 2450 area, where a lot of corporate bids are sitting at. As a matter of fact, we have bids from 124.50 all the way down to about 23.50, and a lot of folks are expecting the possibility that the Bank of Canada will leave rates unchanged or possibly take a preemptive move to cut the rates even further. Now, there are four major factors going into what might cause the Bank of Canada to consider either making a rate change or leaving rates unchanged. First off is employment. In January, the Canadian employment rose over 35,000 new jobs, and the jobless rate fell to 6.6%. Stronger employment means a strong Canadian dollar, and therefore, if that's the case, we see rates unchanged. And if the verbiage from Governor Pillot suggests that they like what they see in the employment data, that may persuade the market that we'll have a strong Canadian dollar forthcoming, or the possibility, a slim possibility, that they may consider a future rate increase in the Canadian dollar. If that were to take place, we'd see the dollar CAD push down tomorrow and test the 124, possibly test down all the way down to 123. Now, another factor to consider is oil. The Canadian dollar has plunged 15% since June, given the 50% decline in the price of oil. And you have to understand, too, that oil is the number one, or should I say the largest export for Canada. And so with oil prices dropping, this had an ill effect on the Canadian dollar. And thus the reason to cut interest rates from 0.75 down to 0.5 to give a little bit more stability to the Canadian economy. Now there's another factor to consider, is the previous rate cut. The market's back in January with their first interest rate cut since 2009. Now, given this preemptive measure by the Bank of Canada, kind of getting ahead, place especially given oil, this gives many economists pause to consider that there's no reason to change rates and we'll leave rates unchanged. However, this is interesting, 64% chance tomorrow that the BOC will cut the rate to 0.5%. Not due to anything related to the Canadian economy and nothing to do with oil. It has everything to do with the odds of a September rate hike of the U.S. interest rate. Even with the recent poor non-farm payroll number, the Canadian dollar has fallen against the U.S. dollar after a number of U.S. employment gains. And this has economists and traders alike betting on a higher U.S. interest rate, and given the continued plunge in oil prices, even though we've had a little bit of bump back up to about 55 today, a drop in oil prices is going to cause drops in Canadian payroll numbers or Canadian employment. Thus, either the BOC holds where they're at right now or goes ahead and makes a cut to be preemptive for a future U.S. rate hike. If that happens, what do we see? We see the dollar CAD go back up. So there's a couple of reasons to stay unchanged. There's a reason to see a possible slight chance of an increase in the future back to 1%. And then there's another good potential to see a rate cut. And so what we'll be looking for is the possibility that the BOC may not do anything at all, and then we'll wait to hear from Governor Pelosi as to what the Bank of Canada's language is and what their thoughts are going into the summer months. If they show anything in their language as being anything towards weakness, look for the dollar CAD to move up. Because again, Canadian dollar is weaker than the US dollar, we look for a push back up. So with all that being said, my thought is that the move down today was to help some institutional traders sitting down here with bids around 124.50. Those bids are now active. They're now long the market with a strong move back down. Now let's just take a look at what's taken place since mid-January. We've seen the dollar CAD bounce around in a range from about 124 up to about 128. A little bit above 128, a little bit below 124, but that's the range that we're in. So isn't this interesting that the market has tested this level in here since mid-January and it can't seem to break it? Well, why is that? Well, when we take a look at the weekly chart, you can see this thing's been moving up and up and up and up, and you would think, well, by now we would at least come back, potentially come back and test the 23.6. It hasn't even done that. One more thing to consider. Look at the monthly chart. A lot of folks in the marketplace are looking for the push back to the big 130 level. We get back to 130, now we're testing levels seen back in 2008. So a push back up here off this double bottom, a lot of folks are looking for that prospect. Well, for us to get up there, obviously we'd have to see the potential for the bank to suggest another interest rate cut in the future, or maybe some negative language or language that would suggest weaker Canadian dollar in the future given oil and given maybe some other factors of their economy. So all in all, as you sit here today and you look at this and give consideration to what the Bank of Canada may do tomorrow, my thought is simply this. This push back down was a push to get bids, corporate bids, filled at 124.50. Now, do we push any lower? We might see a push down, a quick push down to around this 124 level to trigger more bids in the marketplace. Unless there is positive language for the Canadian dollar and any thoughts as to a stronger Canadian dollar, this thing's going higher. Well, that's my thoughts going into tomorrow's interest rate announcement. Give it some thought. Consider where you might want to enter the marketplace. You may just want to sit it out, wait for it to happen, let a trend develop, and then carry through, because where we're sitting at right now, about 125, we got 500 pips to go to hit that big 130 target that a lot of traders are looking for. This is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.